Hello and welcome to a special edition video from Hernandez Retirement Services. Woo! What a day we had on the 26th. The day after Christmas, a 1,086.25 point rally occurred. This was the largest one-day point gain in the history of the Dow. That got me thinking, what effect do historical up days have on their index? Do they mean anything? Or is it just noise? I will show two different historical time frames from the Dow Jones Industrial Average that include 14 of the top 20 all-time point gainers. Using this information gathered by Wikipedia, I will show using charts the significance of these big day rallies. Before we begin the charts, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on an examination of past price movements and cannot predict the future. Technical charts reference are subjective. No strategy can ensure success or protect against loss. Investing involves risk including loss of principal. I begin with a chart of the Dow Jones Industrial Average during September 2008 until April 2009. I will only use the long-term 200-day moving average line represented by the blue line. The 200-day moving average is a popular technical indicator which investors use to analyze price trends. It is simply a security's average closing price over the last 200 days. Well, during this time frame, 6 of the largest historical daily point gains occurred from the Dow. So what can we articulate when we have several historical daily up days during this time frame? Let's look where the index is when this happens. Let's look at price in relation to its 200-day moving average. This line is above price and never once during these rallies was a cross above ever threatened. That is a bearish or a negative sign. 5 of the 6 historical updates were followed by brief rallies which failed and then were hit with lower lows. So at least in this chart, if you are an intermediate to long-term trader or investor, these days were just a bunch of noise. Now, the next time frame we look at has the largest amount of historical daily point gains is the current calendar year. In fact, 2018 has accumulated 8 of the largest historical daily point gains. Now, some can argue points and percentages are different, and I agree. But we keep hearing of the point increases, so I will stick to that. In this chart, I use the green arrow to identify 7 of these historical dates. So, as of now, we can safely say none of the large historical daily point gain has led to a new bull market. They rally and fail. Just this week, the 26th had the largest historical point gain in Dow history. The reality, though, is that the Dow is below its 200-day moving average. Again, we see another time frame where the biggest point gains, for the most part, are not signs that a bullish run will begin, but just noise. So what does this mean? I hope that the charts reveal that the largest historical updates do not mean that a new long-term rally will ensue. In fact, going over these two time frames that have 14 of the 20 largest historical daily point gains, they seem to occur during a market that is not doing well. Why does this happen? In my opinion, based on the volume of those days, is that institutions are buying. Why do they buy? It is either to buy what they think is a value price or to pump the market up to try and get out at a better price than when the rally started. I know we see these big rally days on the news, but it is for the most part just noise. The question should be, where are we in the trend? Currently, the US equity markets are in a downtrend. Prices are below their long-term 200-day moving average. Now, there is still time for the US equity markets to recover like it did in 1998, 99, and 2015-16. But the longer these indices can't break out, there is a higher probability that further drops can happen. Just follow what the market price combined with an indicator, such as a 200-day moving average, or if you're using weekly charts, the 40-week moving average, tell us. Just tune out the daily noise. I would like to thank you for viewing this video and I hope it was helpful. Please subscribe to my channel for future videos.